Wealth Wednesday with Brent Wilsey, president of Wilsey Asset Management.
Good evening. I'm Brent Wilsey, president of the investment firm Wilsey Asset Management. Well, private equity is getting into kids' sports, and this is not a good thing. It's actually a terrible thing. But first off, let me explain private equity. Private equity is PE, is what it stands for. And actually, private equity is where you put money into a blind pool. You don't know where the money's going. They've done very well over the past, they say. So brokers are selling a lot of this private equity. And they currently have about $2.5 trillion in cash that they're trying to find to put it somewhere to get some great returns, because they don't get great returns on the cash. Well, they're doing things like, again, looking at youth sports, other things, and they look at things where, gee, we've done about 20%. Now, they don't tell you that their fees are a 2% management fee. On top of that, they take 20% of the profits, so they've got to get big returns. And what they're looking at is youth sports is now a $40 billion industry. They're saying, wow, a lot of money there. What can we do to make some profits from there? That's the bad part, because what private equity is going to be doing is going to be buying leagues, buying the tournaments that go on, buying the training facilities, the sport complexes, all these things, because what they're looking at doing is not what's best for the kids, but looking at what's best for them to get these big profits. And that means prices will go up with all this youth sports. And I know right now it's expensive, it's only going to get worse. And I coached football and soccer back for my kids when I was younger there, and I think it was like $200 to participate at that point in time. But there was kids that maybe their family just couldn't afford it. Well, what we did was we gave them a scholarship so they could play. And youth sports is so important because it develops such things as, teamwork. It develops, camaraderie. It develops, how to win, how to lose. And that's difficult. It also teaches them discipline, to show up for practice and play the game and do all these things. It's very important for youth sports. I actually had one kid I remember coaching. He played baseball and football. He now plays professional baseball. So it can really develop life tools going forwards, and this would all go away because private equity, only rich people would be able to afford to play youth sports, and those people that couldn't afford it, well, they'd be left behind. It's such a terrible shame. And it does really help kids develop a lot of skills that they can use later in life. And what I see with private equity, and you may not know that you even have in your portfolio because it's a blind pool, and what's kind of funny about private equity, they say, oh, there's no market fluctuation. I'm going to tell you, that's an illusion. You do have fluctuations. They just don't account for it every day. And who comes up with the values every quarter? The management team, who it's kind of like the hen or the fox guarding the hen house. It just makes no sense how they do that. And right now we're seeing private debt, private loans, they're starting to decline. I think the next thing is going to be the private equity, because they can't invest this money. And where they're going to places like youth sports, it's a shame. They need to stay out of youth sports, because that should be for kids to help them develop those skills, not trying to get bigger profits for investors. And again, I do believe it will follow the same path that private debt has followed, where private debt, people are trying to get out of there. They are only allowed 5% redemptions. Well, they're trying to get out 15, 20%, and the companies are saying, no, you can't do that. So this is a problem. If you're not in private equity, don't be sucked into the sales pitch. If you're in private equity, I would say now, try to start getting out of it now. It may take you years to do that. But I do believe private equity is going to have some major problems down the road as they start having problems not getting those big returns, but yet still charging high fees. Thanks for watching. I'm Brent Wilsey, back next week right here. Have a great evening. We'll talk with you soon. Bye.
This has been Wealth Wednesday, sponsored by Wilsey Asset Management.